Right, what a morning. So, okay, where are we? London session recap, 30th of March 2022, of course, on Euro Dollar. So, as I've been saying and constantly reminding myself, as well as you guys, right, we're coming off this monthly demand zone. So, regardless of kind of what monthly move we can expect from this level, we're going to expect some decent amount of bullish pressure. And what I mean by that is whether we come up here or not. Of course, I have no idea. I'm not super interested in that because I have no intention of trying to swing any trades up that far. It remains to be seen. Personally, I would view this as a weak low because it failed to take out this high. But then again, this is also a weak high because it failed to take out this low. So there's a lot of weak structure building either side, but that is what happens when what? When we're arranging, okay? So when we're arranging, then we kind of focus more on supply and demand, right? As the next sort of major confluence, because price will typically tend to play ping pong between those ranges until price eventually takes the liquidity on either side, or it may sweep and go that way, or etc. We don't know. But the simple point I'm trying to make is we're coming off major monthly extreme demand, right? So we can always expect that deeper or more stronger bullish higher time frame move. Likewise, we have that extreme weekly demand nested within there, so we may be coming up towards this weekly zone, or who knows, maybe we'll have a bit of reaction and push up higher and come up to the top of the range, but probably expecting price to come up to around this region, and then we may continue, we may not. But what that gives us is a very strong edge that we can expect to play longs up into around that level, and then we can see how price reacts as it gets around there, right? Likewise, daily chart, we initially had a bit of a pullback. We had initial bearish sensitivity from the prior swing range, which does happen a lot. Doesn't necessarily mean it will go on to form a lower high from here, but it's still bearish confluence nonetheless. That then failed to put in a lower low, price then came up higher, and it tapped into this buy to sell supply zone, right? The reason why I'd have it drawn on there is because if you draw it from the inside bar, right, the next candle fails to break that prior candle's low, so then you can draw it from this candle here if you want to do so, or you can do it on the buy to sell wicks. If you're super strict, remember supply should be a bullish candle that's then engulfed by a bearish candle. So of course that wouldn't be that in this case, this orange box. So that's why then you can then draw it from the buy to sell wicks, because that will likely be a bullish, the buy before the sell on a lower time frame. Okay, so it's kind of just a way of trying to clean up a bit of a messy zone compared to how much cleaner this one is here. So we did have an initial reaction from that, but again, failed to clearly put in a lower low. So if we do get a daily close above this level, then technically that would be a daily flip zone, right? This being the base of that reaction. As you've just seen, TradingView is messing me around still, deleting all of my drawings, but essentially anywhere from the high of the reaction to the base of the reaction would be your daily flip range, or you can refine that down to this daily zone, okay? So there is some confluence, but also, we've only had a tap in. There can still be plenty of orders within here to contain price and push price down. The supply zone is valid until price trades above it, right? Until it at least trades at least a micro pip above it. So do bear that in mind, but probably expecting price may make its way up towards this inside bar here, which we can act this as inducement, kind of following on that supply chain. So that's kind of a decent first target for the daily chart to potentially make its way up towards, where then we could potentially look for a daily lower high to form. Cool. So looking at the 4-hour chart, as you guys have been following along, you will know kind of my view of this being 4-hour structure. Not really, me personally, although I have it marked as 4-hour structure, and I'll keep it that way and I'll keep it mechanical, it's not the most convincing of structure, but ultimately it doesn't make a massive difference to our trading. Using the M15 sort of as our clear intraday bias, we can see this larger swing in price. Potentially we're now going to expect this larger hard time frame pullback, okay? So it's not the most significant structure. Even if some of you had it switching bullish here, that's cool as well, right? It's not going to be the be all and end all of you being profitable or not. So what I am going to do is I'm just going to keep it simple, keep it mechanical, stick to those 80 pip rule, right? And now if we can get, we have just had it, 4-hour close above, we have now switched bullish, right? And the swing low will stay where it is because that's still the lowest point that took out this high after this high was printed. So we are now kind of officially bullish, right, on the 4-hour chart if you map structured the same way I have in this case. But before that happens, we could kind of, read the larger internal price action, right? Where we're looking at these larger swings, which you can see are marked out with those sort of black semicircle lines or ellipses. I don't even know what the word is, but hey ho, geometry is obviously not my strong point, but yeah, we can start to see that happening, right? And that's why when we saw that move yesterday, M15 switch bullish, that's when I was then talking about in the recap, okay, it's probably pretty likely now we're going to take out this high, looking at this sort of larger bullish order flow within price. Ultimately, that demand chain ended up holding, right? Once we broke up that supply chain and a lot of volatility kicked in. Why does that typically happen? Obviously, news was a big driver in this part, but when you've seen all of these supply zones mitigated, once price breaks up above it, there's not really enough supply within here, to absorb price. That's typically when you will see those large moves. And to be fair, that is what I did think may happen when we initially, because I remember I previously had zoom in a little bit, 4 hour, hopefully this will drag, will it? No, it won't. Trading views still being horrible. When I initially had the 4 hour demand zone drawn like this, right, following the mitigations, and then once price, I think I had it drawn like that, or potentially, like this, right, once price then started to break through that here on the 28th, at the start of the week, I believe this was, then I thought, okay, maybe this demand chain has now failed, and now maybe we'll see this, but obviously the opposite, where there's not enough demand left within here and we'll dump, because that is very typically what happens. But like I've also, I believe explained yesterday, was that until price trades through a zone, there can still be plenty of orders within here, right, to contain price. So once that held price, and then we broke up through the supply chain, cool, right? Be willing to switch your bias as price develops, flow like water, don't get attached to anything. Okay, now we can have a pretty strong bias that this is that sort of larger internal high that is now weak, right? Looking at these larger sort of swings in price. So if it comes all the way down here, fails to take out this low, the supply chain has now failed, especially when we come up into here to London today, it's pretty damn likely we're going to take out this high, right? We're just building some nice liquidity with those equal highs for early shorts to then get smashed. So even though my personal view was that it was very likely we were going to see this move, I don't know exactly when that will happen. So I am happy to look for shorts within here, to play a bit of a pullback, because we could have pulled back, even if we only pull back a little bit, or potentially down here, there could still be, a little bit of not counter trend, because technically if you map structure the same way as I do, the 4 hour was still bearish at that point. But yeah, hopefully you guys get the point, right? This was not a high probability area to be looking for shorts. This is a weak high, and that's the main thing. So if you're trading from a weak high, you have to understand that this is a low probability area to be shorting from, right? After all of the price action that has developed with the overall context of price, right? Where we are on the monthly, weekly, and the daily, and there's a decent chance, that we're going to get that bigger higher time frame pullback, right? So when all of that has happened and we're at this point, it's a lot lower probability to be looking for shorts. But for me personally, I was happy to do so. Big part of the reason why is because of basically how large the M15 swing range we were within. I'm just going to delete this 4 hour zone just to make it a little bit clearer. Because for me, the swing low was all the way down here, right? Because that was the lowest point that took out the swing high. Did not classify this as a swing pullback because it wasn't 30 pips. So this was a swing high. So during New York, we came into that extreme M15 supply nested within that 4 hour zone. So yes, it's a weak 4 hour high up here. Yes, we expected to get smashed. But once we'd had that M15 shock here, signifying we're getting an M15 pullback, then we correctively move up, or reasonably correctively move up during Asia, into that extreme, just going to zoom in, M15 supply that caused that M15 shock, right? So then coming into London, price is around here. Now, I have seen this setup play out countless number of times where essentially, you have a large M15 range like this. Prices pull back during Asia. So one, it hasn't pulled back below the EQ. So that's one sign that we can still have a bit of a deeper pullback. But the other sort of major confluence or idea behind why we may see a deeper pullback is because that low had not mitigated any demand on the M15, right? Even if these sell to buy wicks, price had just missed it. Of course, it doesn't have to. So this is a perfect example when momentum is strong, etc., etc. Price does not have to reach the discount. It does not have to reach M15 demand. Of course, it doesn't, right? But there's just some confluences in which typically, if that doesn't happen, you can then still play those counter trend shorts with a decent amount of probability. But the kind of specific characteristics of price, of which I was referring to earlier and which I've seen a lot happen, is when you have this move, we come into an extreme supply zone, we have a decent bearish pullback, right, and then we correctively sort of move up during Asia, we come into that extreme supply, right, we then sweep liquidity, we then have a bearish chop coming into Frankfurt Open and London. This for me, even though I know I'm trading counter trend, I know these are weak 4-hour highs that are likely going to get smashed, I'm more than happy to take shorts from these because I've seen these play out so many times. And when you have a large range like this, what that means is you have a high risk to reward, right, if you are going to have that pullback. So that's why another tick in the cards why I was happy to do it, okay? But just want you to understand that, yeah, it's lower probability because you're trading from weak structure, okay? Cool. Now, once we had that tap into the M15 supply, we had that bearish change of character, and then we had this zone here, which for me classifies as also a sweep zone. I was then more than happy to look for an M1 entry within here. Now, where I sort of messed up in my analysis and where I was just a little bit, I don't know if lazy is a bit of a strong word, but just wasn't on the ball. I was kind of, I guess lazy is kind of accurate for me because I was kind of a little bit attached to the idea that, yeah, this is super clean, we're going to tap into here and we're going to at least take out this low, maybe then we'll sweep that low, tap into these sell to buy wicks, or maybe here, and then we can look for the higher low, and then boom, jobs are good and right, nice easy trade, super high RR, down towards this low. Yeah, I was probably thinking, this here was all just going to be that liquidity to then target to then see a decent move. Whereas if I had paid a little bit more attention, what I know some of you saw, which I didn't see until afterwards, was that we had this supply here, right? Valid supply that broke this low, price came into it, reacted, pushes up. So what does that give us? That gives us our flip zone. From the top of the reaction to the base of the reaction is your range, or of course you can refine it to a single pivot candle, right? And then that's when we mitigated in here. Initially had a nice move, so if you caught the risk entry within here, you should have been able to, on the M1, right, or lower, you should have been able to get to break even or remove your risk, right, once price came down towards this level, and then you wouldn't have been stopped out. However, as we'll see now, just get this on the 4H. On the M1, I got smashed here. So again, TradingView is messing around with my drawings. I'll redraw that. 2 seconds. Okay, so the way I viewed this, let's just do split screen because it'll be a little bit easier. Let's get M15 here. And let's get M1 here. Cool beans. So the way I was simply viewing this was, I'm expecting that deeper M15 pullback down to discounted demand. We have pulled back during Asia into this extreme M15 supply. We've come into it, we've had our bearish change of character, we've had our sweep, decent little bit of momentum. We have a fresh M15 supply zone to trade from. Cool, so I'm going to get in shorter here and see if we can at least try and target this low, whilst being aware there will be some obviously demand to try and tackle through on the way, but I had initially missed this one here, or just wasn't kind of paying that much attention to it. So you could have taken a valid M1 risk entry within here. Now some people would classify this as a confirmation entry, and this is where the definitions can get a little bit convoluted because essentially you're playing a confirmation of the larger extreme zone. But for me, the way I classify it, again, it doesn't really matter, but the way I classify it is this blue box here that we're trading from is an M15 confirmation entry of this large level, right? Because you want to short from that level, but then you're waiting for the M15 CE, right? So for me, I would classify it as an M15 confirmation entry, but it's an M1 risk entry, right? Because price has to break all the structure to come all the way back up. So for me, an M1 CE is what I actually took, which is when price came into the M15 zone, right? Our M15 supply zone, waiting for our M1 change of character. We get a pullback there, we move up, we get a pullback, we never break the low, we move up, we never break the M1 low, then we move up, right? Then we come into demand. We then fail to put in a higher high, right? So then demand flips to supply. We then take out that low, right? That being the M1 high and M1 lows, and then we have our bearish change of character. Okay, boom, so get rid of all that. So now we have our flip zone, okay? This high swept liquidity behind those highs, so I counted that as a decent sweep. Then we have a mitigation, okay? So now I was happy to trade it from here. Yes, there are equal highs here, but I'm happy to accept that risk, all things considered. Now, where I kind of messed up a little bit, 2 reasons. One, I didn't have this demand zone drawn on, just completely slacking there in my analysis, which is a very, very valid flip zone. Overall, order flow is pretty much bullish at that point, especially all throughout Asia, right? Nothing's really broken. Yes, we did break through this, which I did like. However, this is a much more significant zone, right? It flipped this level. So then once we came into here, this is why the risk entry was decent, because you could get to break even or remove your risk or take partials before we get down to here. So that's why you could have taken that, even though I wouldn't necessarily advise all of you take risk entries for counter trend trades. Obviously that would depend on your plan. But once the CE happened and once I set my order, what had happened? Well, price had come down and it had mitigated that demand level. So now I'm trying to trade against that demand, right? When I guess you could argue demand is in control. Longs are pro and 15 trends. We're trading from that big weak 4-hour high. So leaving your order on here is a lot lower probability once that's made its move, okay? The other then angle in which I sort of messed up was that there was, I believe, Spanish CPI news. Now this is on its own low impact, or at least the way Forex Factory classifies them. The yellow, orange, and red flags. It's a very rough indication, right? Fundamental news. It's not just as simple as this is high impact, this is low impact. Obviously, there are the major ones like rate announcements. They're always going to be high impact, but with the lower ones, with fundamentals, data has different importance depending on it's the context of the situation, right? So if everyone's looking to the ECB to be raising rates and then suddenly we look at Spanish CPI and it's really, really high, right? That the context of that scenario is people then going to start interpreting that data as a lot more important than maybe what they would in different times, right? Without trying to kind of get too bogged down in fundamentals. So long story short, there was news there that I didn't have up on my calendar because I've filtered it to only see orange and red, so medium and high impact. But Spanish CPI, I believe, came out about 9.8% year on year. So inflation is starting to tick up a lot, which would then obviously be increasing the probability that the European Central Bank will need to raise interest rates, and therefore that is going to be bullish for the euro. But ultimately, right, we can be technical traders. We don't have to worry about that. For me, the main technical reason why this was not the best trade, because it's heavily counter to the M15 trend, trading from those weak 4-hour highs, but more so is that price had come down and mitigated demand. And remember, that question we get a lot is, what point should you cancel your order? Well, this is kind of the best mechanical answer I always have for you is, well, once kind of it's made its move and it's come into demand, then you want to cancel your order. Because imagine, right, if I open up on the M1 and price had given us that initial shock here, and then it tagged me in, that's exactly what I want to see. These are always, for me, the ones that play out the most, the favorite trades that I like. It tags me in, and then I can either take profits down here, take some partials, or at least remove risk, because then once it's mitigated demand, then I'm risk free, right? Or if banks are, excuse me. Whereas once it's coming in here, now you're trying to short against the overall bullish order flow in the M15 being intact. So it is what it is. I don't think it's the worst trade in the world. I accepted the risk. I knew it was aggressive, counter M15 trend, trading from week 4 highs, etc., etc. But I think if I had this drawn on my charts, and I had been maybe paying a little bit more attention to when those news announcements were, probably not the best trade. It had a little bit of slippage as well. So I believe it's around minus 1.2R here. But it is what it is. Now, at that point, once I was stopped out, what had happened? Well, we then had a bullish shock again on the M15. Clearly a lot of momentum. At this point, I'm seeing those highs go. Yes, there is a possibility that price could mitigate some remaining supply within here, and that's cool. I'm open to that. But at that point, what I would want to see is this flip zone fail. Why is that a flip zone? Well, price came into supply, reacted, and then pushed up, right? So that's your flip zone. It's swept liquidity, a lot of momentum, right? Supply is clearly failing. So that's why I posted a chart in EU saying, right, I wouldn't really be interested in shorts now until that fails. Doesn't mean you can't look for M1 entries within here, but for me, with the overall contacts and everything, I'm leaving it, right? This for me was clean. I love this really, as much as I could love that kind of aggressive counter trend setup, again, with those weak 4-hour highs. I really like this M15 price action at the start of sort of Frankfurt, London. These can give you extremely, extremely nice setups. But once kind of this demand had been mitigated, considering the overall sort of bullish movements, this flipping that supply zone, etc., this would be a good level to kind of look for those hedges against the shorts, or cancel your order at that point if you hadn't taken that initial risk entry within here. So yeah, that's my view, sort of the price action. And I wasn't really interested in wanting to buy from up here. Obviously, don't want to be buying right hand M15 high. Don't want to be shorting until that demand was going to fail, if it was going to fail. So that was basically me done for the session at that point. So let's have a look at the higher time frames and potentially see what we can expect next. So I'm just going to delete these. So yeah, I'm not in love with the way I've mapped 4-hour structure, to be honest with you. Some people are viewing it basically the same way as daily structure, and they have their 4-hour high and 4-hour low here. I think that's cool as well if you're using a little bit of discretion at the moment, especially with the volatility. Some of you kept it a bit more aggressive and you viewed it as bullish there, which is cool because then you would have had the swings like that. But again, it doesn't massively matter, always over the long term, as long as you can kind of see, okay, well, I've got my swing high here and my swing low here, but I can also read what's going on with these larger internal swings, right? Then, hopefully you guys can use a little bit of nuance to then interpret price, right, with the overall context. But let's keep it mechanical with these 80 pip rules. So your swing low is still now down here. We are now bullish. All right, so really this is kind of the only unmitigated demand I have. Potentially there could be, it's not going to copy, cool, something within this wick, but not really going to worry too much about that right now. And then we also have this zone here as well. So they're kind of our clear 2-4 hour POIs we could look for longs. But then you can also be looking for shorts from this level here, really nice level, swept liquidity, part of this supply chain, and then we have this supply chain up here as well, which could be another decent level where we could look potentially for 4-hour pullbacks from, right? Potentially get those moves down into demand, so on and so forth, and then we may switch bearish, or who knows, right? It's a bit too far away, but that's the way I'm viewing price now. 4-hour is bullish, M15 is bullish. We have 2 clear 4-hour POIs to work with. So let's fire up the M15. So M15 swing structure. This is now the swing low. Just going to tidy this up a little bit. Just do that with you guys. I know some of you who are a bit more advanced, you need to see me do all this, but I know some people take value from kind of how I mark up charts as price develops. All right, so this would be the M15 swing low. I can put my pretty little circle on that low there. And then we don't know exactly where this swing high will be until price starts to pull back more than 30 pips, right, if you're using those rules. Cool, so then what we can do is mark out the premium and discount of the range, although it's not really too useful until price starts to pull back, but we roughly know with current price this would be discounted levels. So we had that sweep zone that flipped this level here, that's nice, that's mitigated. Then we have this level here as well. Okay, which these are decent because they're more of an extreme discount, right, near the swing low. They're nested within that 4-hour demand, so these are always going to be your highest probability. But I'd be happy to trade from here as well. And then we have this zone as well, but this is in the premium and not really any inducement at the moment. But I would argue that's a flip zone as well. For me, I'd classify it as a flip zone because it does still flip this supply within here too. Cool, so now we have kind of clear at the moment 4 M15 POIs, with these 2 down here being the highest probability within that 4-hour zone. I kind of marked out this large M15 supply here, but it was more just to kind of give me a bit of just a reminder that there is some potential supply here, because if you kind of refine it to here, this has already had a bit of a mitigation, could be some orders left within here. So as this isn't entirely fresh. So I'm kind of just marking that out as kind of a large rough idea, a rough zone where price may start to pull back, but not really bothered to try and look for those counter trend trades from here really, unless maybe you've got some nice real clear price action, like decent shock and then a clear zone, then you could play that. But I'd prefer to be kind of trading counter trend, ideally from that 4-hour supply first. So let's go and investigate and see if there's any nice clear M15 zones within there. That's been a real nice clear M15 zone there. Sweep zone, part of an M15 supply chain. No inducement in the leg, but I'll still be happy with that. Potentially could come off some of these buy to sell wicks, but they're nowhere near as prominent as a zone like that where it's a full candle, right? Because what are buy to sell wicks or sell to buy wicks? We're just reading lower time frame zones on this time frame. But regardless, that would still be a valid M15 POI for me. That's nested within that 4-hour zone there. So I would prefer to be focusing on the Pro M15 trend trades, ideally from the M15 discount. But for some of you who are happy to play the M15 pullback, we have now had the M15 boss. What do we expect after an M15 breaker structure? We expect an M15 pullback. What's one of the things that can signify to us that an M15 pullback is starting? An M15 change of character. So at the moment, the M15 internal low is this low here, right? So if that low were to break, then that could be a potential signal we're getting a pullback. But ideally, we at least mitigate some supply first, and even more ideally, we want to see it from 4-hour supply, right? Because then that gives us confidence we may be seeing a 4-hour pullback, right? So yeah, that's the way I view it up. Hope you guys have a good day. If you're trading New York, have a good session as well, and I'll see you next one. Cheers, guys.